I want to take a look at gold and the currencies in this video. I'm seeing a lot of analysts make the same mistake again that they made during the baby bull, and by that I mean they are putting way too much emphasis on the COT reports. The commercials have a very poor record of being able to spot major turns in markets, so they tend to um, hedge way too heavily, way too early in a rally when a major um, long-term secular trend is beginning. They tend to be stuck in the past, just like most people are, and they assume that what happened in the past is going to happen again. So once gold reached that 1360-ish level, that same level, 1370, where it had been turned back time after time, the commercials just naturally started to hedge very heavily against any further move higher, and then of course we got a breakout. So let me switch this chart over to gold, and then I'm going to widen this out a bit. All right, so the same thing is happening now that happened during the baby bull here. The commercials, let me zoom in a bit. The commercials got very heavily short right here in the second week of March. And you can see that was a mistake. And they stayed very heavily short for the next 17 weeks. And gold kind of double topped here in August. But they were 17 weeks too early on their shorts. I think the same thing is happening again. So let me expand the chart. So, like I said, this 1370-ish level has been resistance for about 3 years. So once gold reached this level, then the commercials just naturally start putting on heavy hedges, and instead of topping like it has done, the last 3 times that we reach this level, gold has broken out this time. And I see a lot of analysts predicting that gold is going to crash based on, basically just based on the COT reports. And I think that's a mistake this time, just like it was a mistake back here in March of 2016. Let me zoom in just a bit here. I continue to think, or I should say, there's nothing at this point anyway that makes me want to change my theory. That it looks to me like gold is churning sideways in maybe a triangle type pattern, and those are typically their continuation patterns about 80 or 90% of the time. I think that's going to be the case here as well. And I think the more important chart is the chart of the currencies rather than the COT report for gold, or where we're at, with overbought or oversold levels on the daily or weekly charts. I don't think any of that really matters a whole lot at this point. I think it all boils down to what the currencies are going to do. So let me switch over to the euro. All right, so in one of my previous videos, maybe it was the last video, I noted that this rally right here I thought was probably a daily cycle low. And since this daily cycle was right translated, the odds were not good that the price would fall back down and drop below this low. Right translated cycles, well, probably 90-95% of the time, will make a higher low. So, based on Friday's action, I said that the ECB would try and turn this back down. They tried on Thursday. They tried again early Friday. They were not successful. The market ended up closing near the highs of the day. So, and I think they're going to try very hard on Monday. I'll show you why here in just a second. But it's my feeling that this is a daily cycle low, and that the euro is probably going to rally more than 2 days. Even left translated daily cycles, the vast majority of them will rally more than 2 days. So I'm going to say at the very least, the euro is probably going to test this 200-day moving average, and I suspect it's going to break above it. Usually, when price keeps knocking on the door like the euro is, we almost had a test here, we had a test here, a slight breakthrough here. I think we're going to have another test this week of this 200. When these multiple tests start happening, it usually means price is getting ready to break out above the moving average. So I'll widen this chart a little bit. You can see the big drop down, and then now we're basically just starting to go sideways. We're not the euro's not making a lot of headway down. It's starting to test this moving average over and over. And if we widen the chart even further, I'm about 95% convinced that we had a final bear market bottom right here. And you can see we've gone 2.5 years, and the euro has not been able to really even come close to breaking this low. So in my eyes, this is a pretty good indication that this was the end of a bear market and the beginning of a bull. And I think this is going to turn out to be a 3-year cycle low in the euro. So now let me move over to the dollar. All right, this is why I think there's going to be an intervention Monday morning. The ECB is going to try and turn the currencies back around. They're going to use the 200-day moving average as help to try and turn the euro down and the dollar back up. It worked multiple times here, and I think they're going to try and use this same strategy again. But I'm not convinced it's going to work this time. And we've still got a pattern of lower highs. See this top here was lower than this one, and even though we got a major intervention by the ECB, they have not been able to push the dollar to a higher high yet, and it is now turning back down again. So if we just look at this as a new daily cycle, then the potential is there that this is topped in a left translated pattern on day, let's see, we got 1, 2, 3, 4, 6, 7, 8, 9. On day 9, there is risk that this daily cycle has topped in a left translated pattern on day 9. And that would be the case if the euro is starting a secular bull market move again after completing its 3-year cycle low. So let me run back to the euro real quick. Okay, so here's the euro. Here's the last 3-year cycle low in the euro. You can see that this, what I think is a 3-year cycle low, has held well above this 3-year cycle low. And if I'm right, this is a 3-year cycle low, and the euro is preparing to rally, then it's going to have more than just one daily cycle before this intermediate cycle tops. There's going to be another leg up. There'll be a higher high, maybe another dip, and then there'll probably be 3 daily cycles before the euro drops down and makes its next intermediate cycle low. So I'm going to say early next week we'll probably have our answer. I fully expect an intervention Monday to try and turn the euro back down, but I just don't think they're going to succeed. And I think the euro is going to test the 200 again and probably break through the 200. And ultimately, I think it's going to make a higher high. than this one, and confirm that we've got an intermediate cycle finally that is going to right translate, and that would be an indication that the 3-year cycle, that this was a 3-year cycle low, and that the euro is now in rally mode, and the dollar would then be in the declining mode of its 3-year cycle. All right, now, and I've mentioned this before too. Most traders, they get conditioned by what has occurred in the past, and they have a lot of trouble adapting to a new environment. That is exactly what I'm seeing in the gold market right now. As I said when I started out, that way too many people are putting way too much emphasis on the COT reports. They just don't work very good when we get a major secular trend. They worked not at all as we started the baby bull, and I said at the time when we broke out of the handle of this cup and handle pattern, I think that there was a gap actually here on this day. I think that the metal sector started the second phase of its bull market with a gap up, a runaway gap that would not get filled, and I still think that's the case. So here's the change that most people are not paying any attention to. Here was a top, here was a lower top. We did have some very marginal higher high right in here, and then as the CRB came down into its 3-year cycle low, gold of course got crushed. But you can see as we made the up, the second, the right half, the ascending half of this cup pattern, this was our intermediate cycle high, and you can see now we have very clearly made a higher intermediate high. This one here. All right, so pretty clearly at this point we've got a higher intermediate high. These were just marginal. This one was not a higher high, but we've got a clear intermediate top here, correction that came nowhere near dropping below this low, and now we've got a very clear higher high, this in the gold market. And then finally the miners, pretty clear in this chart. Lower highs, pretty close, but a lower high, a lower high, a lower high, and then the character changes. This top slightly above this top, and now a glaring change in the market. This intermediate cycle has gone well above this intermediate top, and I don't think this intermediate cycle is done. I think we're going to at least test the baby bull high before this intermediate cycle tops, and we get another 4 to 5 week correction. And then also we've got a major resistance zone right here. We've actually had several, all of these tops right in here, right around $25 or so. 25 to 25.80. This is a major resistance zone. It was the top of a consolidation box, and you can see we tried last month to break through that, failed on that attempt, dropped down into a pretty clear daily cycle low, and we're trying to break through again. And as of Friday's close, widen this a little bit, you can see the miners did break through on Wednesday, and they tested it on Thursday and then held above it again on Friday, and they're in a position to possibly produce or start to produce a sustained move above this resistance zone. And I've noted this in several videos that breakouts that occur early in a cycle tend to produce sustained moves. This is pretty clearly a daily cycle low. We're only on day 8, so we're very early in this daily cycle. This has the potential to produce a sustained move above this resistance zone, and I think it will. And I think it's not going to take too much of a rally over the next week or two before this top here at the baby bull high starts to act like a magnet, pulling price higher. So I'm going to say, if we can get past 27, maybe up to $28 on GDX, then this is going to start to act like a magnet, pulling price higher, and I think we're probably going to test that before this intermediate cycle here tops, and we get some kind of a correction, probably a correction that comes back down to test this resistance zone from above. But that's kind of my expectation. I think a lot of people have got this wrong. They're basing their analysis on what happened before the last 3 years, and we are not in that kind of an environment anymore. We're in an environment where intermediate cycles are making higher highs and higher lows, and I think you need to change the way you think and the way you trade and convert to bull market strategies rather than the strategies that worked during this long basing phase.